Have you ever wondered how to leverage the equity in your current home in order to purchase a new one? Well, in this video, we're gonna go over the different strategies and how you can leverage the equity in your current home to buy your dream home. Hey, it's Patrick Lorienti, and I'm so excited to be talking on this topic of how to leverage the equity in your current home so that you can purchase your dream home. And there's going to be a couple of strategies we're going to go over. But before we dive in, I just want to encourage, if you find this content valuable, to like and subscribe to this video. We want to get this type of content out to as many people as possible. That is going to allow us to grow and get exposure to people who need to hear this type of information. Now, let's get into it. And first up, I'm going to answer the question, what is equity? Equity is your financial position in the house. For number's sake, let's say you bought $1 million house and the remaining debt on that house that's owed to the lender is $500,000, meaning your financial position in that house is the remaining $500,000, and that is what we call equity. Another way to think of this is if you think of your house as a big investment account. Whatever you don't owe the lender, that's how much money you have in that investment account. And in this video, we're going to talk about how to access those funds for the purchase of your dream home. You may be wondering, how does one accumulate equity in their home? Now, there are three main ways that you can build equity. The first one is appreciation of home values. In the marketplace, home values tend to rise over a long period of time. In fact, if you Google the average appreciation of real estate per year, what you'll find is most articles are going to say that the average appreciation of real estate per year when looking over a long period of time is roughly 2 to 4%. If you do that on $1 million house, 2% is $20,000. That's a lot of money in 1 year of growth. So as you can see, appreciation of home values is one of the best ways that your home builds equity. The second way that you build equity in your home is what's called debt pay down. So if you took out a loan to finance your house, a portion of that monthly payment is going to pay down the debt owed on the home. Therefore, your equity position is growing every single month. And the third way that you build appreciation in your home is, well, home improvements. And I have a quick story to share with you. And it was when I bought my first house. I was 21 years old. The house was awesome. It had so much character, but inside it needed a lot of work. And so throughout the years, we refinished the hardwood floors, installed new carpet, refreshed the paint, and updated the kitchen. All in all, through home appreciation, debt pay down, and home improvements, our home was able to appreciate almost $150,000 of appreciation from the time we bought it to the time we had sold it. If you're looking to gain more equity in your current house, those three factors are what's going to play the biggest role in you accumulating equity in your home. Now, what do you do with all that equity? It's sitting there, but you can't touch it. You know you have a substantial amount of money in equity, but you're wondering, what are the different strategies I can use to actually leverage that equity and buy a new home? The first and most popular is to sell your home. The simplest way to access the equity in your home is to sell it, get the paycheck, and then use that for the down payment on your new house. I will say, after doing this going on 10 years, most people will choose to sell their house instead of using the other three strategies. And the main reason for that is because in order for them to purchase their next home and have a monthly payment that makes sense for them, they need a substantial down payment in order to achieve that. The second strategy is using what's called a HELOC, a home equity line of credit. You know how credit cards have a credit limit? And the bank is essentially lending you that credit limit every time you use your credit card, and you pay the bank interest on the money you're borrowing. That's essentially what a HELOC is, but instead of the bank giving you that line of credit, you're pulling that money from your house. Now, even though it is your equity that you're borrowing from, the bank will assess an interest rate on that and will charge you a monthly payment. So before going down the HELOC path, please make sure to understand what the cost of borrowing those funds so that you can ensure you're making the best decision for yourself. The third strategy is a cash out refinance. Now, the pro with a refinance is you don't have a new monthly payment of the debt you would be pulling out using a HELOC. However, when you're doing a cash out refinance, you're increasing your loan amount. So for example, let's use that $1 million house and you owed $500,000, but you're taking out $200,000 in order to purchase the next home. What you do is a cash out refinance, and instead of your loan being at $500,000, now it's going to be at $700,000 because you took that $200,000 and put it on the new house. Now, whenever the bank does their calculations, your monthly payment on your current home will now be assessed at $700,000 instead of $500,000. So this is a great strategy to utilize that equity, but you also want to make sure that you understand what the new monthly payment of your mortgage would be before pulling out that cash to buy the next purchase. Now, bonus tip here, if you're doing a cash out refinance or a HELOC, you're looking at potentially renting your current house out, but still being able to leverage the equity to buy your next primary residence. And in doing so, you always just want to make sure that whether it's a HELOC or a refinance, all the numbers are going to make sense for you in your situation. Now, that brings us to the last strategy that we are going to discuss in this video, and that is the bridge loan. Most people will use a bridge loan in this circumstance where they're going to sell their home and buy a new one. But before selling, they want to buy the new house. And so essentially what a bridge loan does, it borrows equity from the house you're currently living in. So you have enough down payment to buy your house first, and then later you would sell your house and pay back that bridge loan. This is a great strategy to utilize your equity before you sell it. You'd be able to buy the new house first, move in, and then worry about showing and selling your house. All of these strategies have do's, don'ts, risks, and benefits. So before we end the video, I just want to talk a little bit about what are the risks, what are the benefits, and what might you consider before going down the path of any one of these strategies. I think each of these strategies inherently come with their own risks, but the biggest risk all comes down to making sure that the new debt, whether that be the purchase of the new house or taking on the HELOC or the expense to a bridge loan, has to make sense within your spending plan. And by spending plan, I mean your numbers, how much it costs to run your lifestyle. And so anytime you purchase a new home, that is going to come with a new debt unless you're paying it off in cash. And so before you decide on any of these strategies, you just need to consider which one's going to make the most sense in terms of the new debt that we're going to be taking on from a monthly payment standpoint. Now, how do you do that without professional help? Well, the good thing is before you execute any one of these strategies, likely you're going to bring in either a professional real estate and or a professional lender, and anyone who is great at their job will help you understand the intricacies of each of these different strategies and help show you the monthly expense that you will incur in taking on new debt. Now, the potential benefits of being able to leverage the equity in your current home to purchase your dream home is you can actually purchase your dream home. Without the equity, you might not have had the chance to purchase the type of home that you do now because of how much your home has grown in equity and your ability to leverage that equity in purchasing that new home. I've helped countless clients in this exact same situation that you're in, where they have their first home, they're looking to upgrade, get some more space, to get that yard they've always dreamed of, to get the open concept with a kitchen that has a pantry so they can store their goods. And if it wasn't for the equity they had in their first home, they would have never been able to buy this second home and have a monthly payment that would make sense to them. And so there are so many great benefits, not only financially, but also from a lifestyle perspective that's going to get you closer to living the life you've always dreamed of. If you choose to use a HELOC or do a cash out refinance and to keep your current residence as a rental, we get into a whole nother video worth of financial benefits that come from building wealth in real estate. And so anytime you're going through the process of considering what strategies are going to work for you, I would highly encourage first, reach out to a high-level professional, whether it's myself or a real estate agent you trust or a lender you trust. They're going to be able to help you navigate through this decision-making process of what strategy is going to be best for you. whether that be to sell the home and utilize your equity that way, or to do a cash out refinance and rent your home. Whatever the case may be, I hope that through this video, you've gained a much clearer and better understanding of how to leverage your equity to purchase your new dream home. Guys, if you have any questions, feel free to comment or reach out. My contact information is below. I am a licensed agent going on 10 years here in Colorado, and I would love nothing more to be a guide, to be a consultant, and to sit down and be a thought partner in these conversations with you as you navigate the process of figuring out how to leverage the equity in your current home to purchase a new home. And hey, before you go, don't forget to like and subscribe to our channel. We have a new video coming out to you every single Tuesday, and I look forward to catching you on the next one.